Hi, welcome back. My name is Yanis, the Conscious Day Trader, and today we're going to break down the New Zealand dollar again. This is the weekly bias, so most of my trades are on the New Zealand dollar. We're going to go into, there was a question in the comments on why am I focusing on New Zealand and not GBP like I normally do. So I'm going to answer the question why I've decided to be trading the New Zealand dollar this week, but it doesn't mean that the GBP might come in play next week. And that is all down to the COD report. That's how I'm using the bias. That's how I'm taking, I'm finding opportunities of what is the best currency to trade for the week. Then I take my day trades. Sometimes they turn into swing trades of 1 to 2. Mainly it will be a weekly trade, but overall it has been a very good daily trades in the last 2 days. So from Monday to Wednesday, it's going far enough to say that this is probably me good for the week. We'll see what happens tomorrow. We've got some news coming in on Thursday if we're going to be trading that on Friday. But I have hit my 50 pip target, which is per week. That is 10 pips a day on this account. So we're going to jump straight into it and we're going to analyze a little bit about what we saw, how we took the trade, how we did some repositioning. It was one trade but broken into 2 positions, and it was very quick. And now I am free to do this video but also go and do other things, and that is the beauty of being your own boss and trading. When you are done, you are done. Or if you don't want to trade, you don't trade. Unlike when you're unemployed and you have to clock in, clock out. That is the benefit. And that is why we're putting all this hard work to understand this business of trading, because not everyone can do it. So here we are on the trade. As you can see on this page, you can actually see the trades from Monday. You can also see the very quick trade on Tuesday, which was for 10 pips. And now we've had 20 pips today actually on the entry here and the reposition here. So we're going to break down the trade. So as we zoom in, we can see this is the actual trade. We took an early trade there on the price of if we hover over it, it should say 054939. That is the best entry, and the worst entry, which is the first entry, was 055160. Now you could say, why did you not hold that for longer? It's plus my 10 pips requirements for the day, and when I looked at it, it was $30 up, which is a little bit over half, 6 pips. So then I closed it. So overall, this is what we traded. We're going to go on trading you a breakdown, the actual trade, but I did a reposition. What that means is I could have waited for this to come and tap into this trade and close it, but this was at $69 when I saw it, and I didn't want to risk this coming even further down and not having profit in order to, and keeping on the risk on when we did have a nice move for more than 10 pips to the upside. So I decided to close this. In the repositioning, we call that a bouncing method, where you're bouncing from one trade to the other. The other option is to close the top end of the trade. That will be the closing, where we're holding our best entry and we're closing the worst as we are getting closer to that price, but we're letting that run. Now this is in scenarios where the price hasn't hit your target yet and you're trying to decrease risk of the trade in order to be able to stay longer in the trade to see what happens. And as always, everyone would say, oh, you should have kept that trade. Look at this, all this profit that you're letting it go. And that would have been, let's say, 10, 20, 30 pips and more on each. That we're looking at $300, $400 on that trade. But as you can see, I only made 103. Why? Because the job was done, and it was done in a safely manner, and that means that we can move on with life, come back tomorrow, see if there's any opportunities, and take the trade, the trades that are A setups. If you haven't seen the previous videos on why I'm trading the Kiwi, or actually we will talk about why I'm trading the Kiwi, but if you haven't seen the previous trades that I showed you on Into 5, you can watch them in the last 2 videos. I break those down. But as you can see, we have a couple of levels on here. These are the monthly levels, which come from the higher time frame. So when we go into the monthly, you will see area of interest here, 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 and that is where the price has decided to stop. And as you know, You can also see on the bottom there my Conscious Day Trader COD report indicator that I've created, and we can see that the New Zealand is at ultimate highs and has dropped off, indicating that the selling or short positions on the speculator side are actually starting to take profits from their shorts. And we can see that movement there. Now there's multiple green candles coming in on the monthlies. As we go into the weeklies, you'll see that consolidation happening now. So we are anticipating a push to the upside. Now, if this doesn't happen, you can see that we're still getting nice impulsive moves to the upside, which are protecting our positions if we have to go into drawdown. And I've got another questions in the comments saying, what happens if it keeps going into drawdown? Obviously, there's going to be an area where you have to call it and say that's going to be your stop. You can either use a hard stop, which I like to use a number wise, like is it $1,000, is it $2,000 or whatever you're going to use, or you can use structures to do your stops. Obviously, the next swing point is all the way back to 2009, that swing point there. So there is a lot of pressure to push the New Zealand dollar up, and you can see that here, that actually the selling and short positions are decreasing as we are getting lower and lower into these ranges. But obviously we're a bit in unprecedented ground because of what's going on with the tariffs and what's going on with Trump. Now we're hearing like 103% on China, which is insane. What is China going to do? Is China going to increase the tariffs to US and all that? We've seen the S&P drop below 5,000, which is also a very bearish move on the US. So a lot of things that's happening. We can see the impact that has on the dollar index, and you can see they're dropping quite a bit. But if you know, like we discussed on the COD report, the best asset that I could see in terms of what's happening in terms of COD report was the New Zealand. And that's why I traded this, because this is one standard deviation of the norm of the last 14 weeks. And that is an ongoing 14-week white line there. So you can see in the last 14 weeks, this is the average. We're looking about 30,000, and we're currently peaked all the way to 71,000 holdings and dropped now to 54,000 holdings, which means that the speculators, which are using leverage to make money, are actually now taking profit. And if we go through each future, we can see another one interesting one was the Japanese yen. Japanese yen can be a little bit of a it's a little bit of a difficult one to judge especially on the long side. When you see long opportunities like this, we did have a sell-off here, but it's the only time that it's had so many contracts, and that can be good. But when you're in such a big position here, we haven't got any other examples of what the Japanese yen would do. So that is a little bit of a tricky to make decisions on that. So I decided if I didn't see anything else, I will probably look to trade this. But at the same time, most of the best setups have come from the short side. So looking at speculator shorts when they're way out of whack, like this one, we can see the big bullish run there, a little bit of a bullish run there. These are weekly candles, so that's a whole week of the upside there. That's another one here and another one here. So all these above the standard deviation did have an impact. Euro dollar, we could see we're in the standard deviation, so nothing crazy there. I didn't want to touch that. The Swissy is above the standard deviation, and we are seeing a big impulse. That would have been another interesting, that was my second best trade to look at. JPB just approaching now levels where we're looking at above the standard deviation of holding longs, which means that at some point now this is going to curl down, and when that does happen, then we're potentially going to see a short opportunity on the British pound. Aussie dollar, nothing interesting there. We can see that the highest have been 141,000 contracts. We're currently sitting at 90, so we've still got a long way to go. Canadian, we have had that drop off, and well, Funny enough, look at that. We see the drop off and we see the push up. We see the drop off here and we see the push up. Actually, you can't see it because of my face, but if I move it here, you can see the drop off here and the push up on the Canadian dollar. So that is another one that we could be a bit late to the party, but so I didn't touch that this week. Then we go to the Aussie. We talked about it, but nothing crazy on there, nothing out of the norm. And finally, the best setup we have seen is the drop off from the highs on the New Zealand dollar. And as you can see, we haven't had that push all the way to the upside. So that gives me still opportunities to stay long on this against the dollar as we are getting into the late side of the week. If you're new to the COD report, this might sound like Chinese to you, but trust me, spend a bit of time. It's very easy to understand. If you have questions, put them in the comments, and I am responding to every single one of you. Remember, if trading seems easy, that means something is not right. Trading can be easy after thousands and thousands and thousands of hours of application, putting yourself into challenging situations, learning new things, learning things that are actually working, basing yourself and your biases and on data, not on subjective analysis when you're looking at information, doing your historical levels, looking at fundamentals with your COD report, looking at the news, staying in tune with what's going on with the pairs and the markets. All these things are going to give you the edge that you need to become profitable. There you go. That is the Wednesday trade. We're done in the Asian market, and now we're waiting to see what's going to open up. I always look at the London and the New York sessions just because I am free and I do like the market, but I've never had the urge to get back in, which is the step and level up that you need to have as a trader. When you have you've finished your job, you can watch the market as an entertainment if you want, if you're enjoying what's going on and so on. But it would be equivalent of you going and watching a football match or doing something else. So that's how you need to think about it. I've done my job, I've been paid, move on. And I'll see you tomorrow for hopefully a Thursday trade. Have a good one.
I can't take no loss. I don't even know what it costs.